Welcome to our video on understanding inflation and what to expect in 2025. Inflation is a crucial economic concept that affects all of us, from the prices we pay at the grocery store to how we plan for our financial future. Let's begin by defining inflation. At its core, inflation is the rate at which the general level of prices for goods and services rises, eroding purchasing power. When inflation is high, each unit of currency buys fewer goods and services. This is why it's essential for us to stay informed about inflation trends and their potential implications for our financial lives. In recent years, inflation has dominated headlines. After a long period of historically low inflation rates, the COVID-19 pandemic triggered a variety of economic challenges. Supply chain disruptions, labor shortages, and unprecedented government spending all led to a surge in inflation levels that reached highs not seen in decades. Now, as we look towards 2025, what can we expect? The short answer is that inflation will likely remain a significant concern for consumers, businesses, and policymakers alike. However, the exact rate of inflation will depend on several unpredictable factors. First, let's consider central bank policies, particularly the actions of the Federal Reserve in the United States. In response to rising inflation, the Fed has implemented interest rate hikes to cool down the economy. If these measures prove effective, we might see inflation rates stabilize or even decrease by 2025. However, if inflation continues to rise, the Fed may need to take more aggressive action, such as further interest rate increases, which would dramatically shape the economic landscape. Next, we need to think about the impact of global events. Geopolitical tensions, natural disasters, or new pandemics can disrupt supply chains and lead to increased costs for goods and services. For instance, recent events have shown us just how interconnected our global economy is, meaning that disruptions in one part of the world can have ripple effects, influencing inflation rates everywhere. Another critical aspect to consider is consumer behavior. As inflation rises, consumers tend to alter their spending habits. They may prioritize essential goods over luxury items, and this shift can affect production and pricing dynamics across various sectors. If consumers continue to cut back on spending, businesses might find themselves under pressure to lower prices, which could mitigate inflation. Additionally, wages play a significant role in the inflation discussion. If companies increase wages to attract and retain workers due to labor shortages, this can lead to increased costs for businesses, which may then pass those costs on to consumers in the form of higher prices. Understanding these wage trends will be essential for forecasting inflation in 2025. Now let's talk about what you can do as an individual to prepare for potential inflation in the coming year. First and foremost, consider diversifying your investments. Inflation can erode the value of cash savings, making assets like stocks, real estate, or commodities more attractive options to preserve or grow your wealth. Budgeting plays a vital role during inflationary times. Be proactive in assessing your expenses and identifying areas where you can cut back. This will give you greater flexibility to manage costs as prices increase. Stay informed. Follow reputable news sources and economic forecasts to keep up to date with inflation trends and policy changes that may impact your financial decisions. While predicting the future can be challenging, understanding the fundamentals of inflation and staying proactive will empower you to navigate whatever comes our way in 2025. Thank you for joining us in this exploration of inflation and economic expectations for the near future. Stay informed and prepared.